All right. 3, 2, 1. Hey, how's it going, everyone? This is Tyler Coates, along with Joe Saz and Brian Swan, aka Fibo Swanee and Smokin' Joe. We are here at another good time watching some action in the markets, and that's always when it's a good time to give you our latest analysis. When it's kind of dead, moving a little bit sideways, there isn't a whole lot to talk about, at least for me and Fibo. We're often just kind of sitting there waiting for some days like this. And now we are going to get to give you our analysis during some nice volatility. And before we get into that, a quick shout out to my mother, who may be out there listening. I just got off the phone with her a few minutes ago, and I'm not sure if she knows, but I've mentioned her a lot on this show, and always telling people to call their moms on Sunday, and mentioning good morals that you raised me by, like how you always taught me to stay out of debt and not pile a bunch of money on a credit card that I couldn't afford to pay off, and how you paid off your home in full as a school teacher, and all these sorts of morals that you brought into my life. And I'm not sure if you have ever tuned in for much more than an intro to the show, so knowing that you might be out there today, just wanted to say that I love you and I appreciate you tuning in, and want to go ahead and also mention why we were talking, and that was she was wanting to talk to me about buying some gold. So that was a really good conversation to have with my mom, as I have been, kind of doing what I do, being so passionate about Bitcoin and sound money and gold, and talking about this with my friends and family as much as I can, and getting my mom to, really sink her teeth into the concepts with not only in theory, but also now putting some money behind it is really exciting. And the main question that she had is, well, if I've, got this coin that's worth a few $1,000s, how am I going to buy toilet paper and some coffee beans? And I told her, what a great question that is, and that's something you should continue asking yourself. And if gold is really something that is very, very important to you, then understanding the reasons why it is going to be such good money, and then understanding where it may have some setbacks, is going to really help you to understand this space. And that is going to be, as with anything, who makes the most money as the people who understand it the best. So that's enough of that. And I wanted to go ahead and say, how's it going over there? Good to see you, Joe. It was great chatting to you last night. You've been getting some trades in today.
Yeah, it's been just a straight up disgusting day, I gotta say, man. It's not pretty. This is max pain market stuff. This is, I trade on my signals, and my signals are not being the easiest to trade today. This is a volatile time in Bitcoin. It's kind of like if you're already in the move, you're doing good. If you're not already in the move, then you got to be very, very quick on your feet, because one slip up and you're fucked. So, and sorry, Sawcruteez, mom, didn't mean to say the F word. But yeah, this is not a scalper's paradise to me. This is kind of like where's the bottom price discovery, and that's something that I don't like dealing with. The price discovery is not a fair fight. Price discovery is fucking confusion. I don't like confusion. I like when people all agree that we're headed north or that we're headed south, right? And when we're running through all these signals, and we'll get to screen share, I don't know if you wanted me to go into that now, or if we wanted to do another, round of intros first. But as you rush into these signals, it gets painful. It gets really hard to trust anything. Obviously you lose faith in your own systems, and you're trying to figure out, all right, what's behind all this. So there's a ton that I have to show. It's been one hell of a day, and it's not over. And this happened not too long ago when we broke down in a single day nearly, what, 30% almost, or maybe it was 20% in one day, 10% the next, or something like that. But it's getting weird to me, Tyler. I mean, we spoke about the bull trap last week, and that's been fucking with my head since a week before, since the 3 days before the bull trap, and now it's just like even worse. You know, now that we've actually played out a bearish scenario, which is a violent breakdown on a macro scale, I think the market structure is postured, if we don't rebound to quickly, it's postured to shift it to a bear market. But I'll wait till we do a full round of intros and get Swanee up in here to say hi, and then I'll do some screen share, because I'm not in any particular rush right now to get my stuff running and then dip.
All right, yeah, let's see how Fibo's doing, and then we'll send it on back to you to dive into those short-term charts.
Yeah, no, I'm sitting here doing well. I'm really watching the market, and I'll go through my charts and show you why I'm just chilling at the moment. But I wanted to say hello to Tyler's mom, and I think it's absolutely awesome that you're calling your son to ask about gold. I think that's awesome. That's what I was telling Tyler before we got on the call. I said that's really cool that your mom's actually knew about gold. So I just had to bring that up. That's pretty cool. No, it's doing great. Let's a
little bit cooler is the guy that we go through for the gold is his son played on my high school golf team. When I was a freshman, he was a senior. So small town community going way back. You know, that's what this world's about. And I think it's what we're going to get back to is the close knit communities with sound money at the core of it.
So I'm hoping that your buddy is giving you a nice bid-ask spread on that gold purchase that you're going to be having in here soon.
Yeah, that's what he said. That's why my mom was calling. She was wanting to make sure that the fine print was looking good. So yeah, definitely a good deal.
Sweet. No, I'm doing fine. Let's dive into charts, Joe.
All right. Well, let me start with the disclosure here. I am long 29, 396. I've taken many trades today. Okay, I've been waiting for the trade where I feel like we're at the fucking bottom, and I'm like, my hands have been sweaty most of the day. Like different parts of my body are feeling weird. That's how freaking intense this market has been. Let me go to screen share and let's talk about this heart attack. Yeah. Just let me know when you're ready, Tyler. Nice haircut. Of course, we got to compliment Tyler's haircut. He's forging. He hit up the local blacksmith to forge him an axe, and he's preparing to go to Valhalla.
No, that haircut is badass. I was trying to figure out a good Viking name for him when I saw it. So,
well, I can't wait till you have one.
We'll come up with something.
Let's see here. All right, let's get the party started. Am I able to screen share?
You should be able to.
Are we on that level of friendship yet? All right. So, oh man, this day has been one hell of a day. When did it even start here? You know, here's the early hours of the day. We're on a 5-minute chart. I'm going to start, I need to start with this because this has been a lot of what I've been paying attention to. This has been the high. This was the bull trap that I'm sure we all remember. I was worried about because I fucking hate the structure on small time scales. And it just had the perfect look to me. All right. We had also some nasty wicks. Now we kind of had a accelerated trend line, which Tyler, this might be more your area of expertise. I just call them acceleration lines on small time frames. When you have a trend that has a good, multiple points of contact, and then you have an acceleration of the trend, that would typically mean that once you break that trend, you fall back to the original trend to determine the next move. Now we've landed in a space that me and Bernoulli were talking about, Bitcoin Bernoulli, the guy with the hair and the eyes and the teeth. And we were comparing a couple things, and that's why I'm not saying doomsday. I would normally be screaming fucking apocalypse, but right now this is actually looking damn near identical to an exact same situation that happened in a previous bull market. Of course, this might not be the best angle drawings. I'm not a traditional chart pattern. I don't know who wants to argue about my pennant here or whatever, but the pennant was broken. The acceleration line was broken. We're dipping our toes and even possibly getting we're getting some action in my little accumulation zone here. And I would expect us to get to this trend line somehow. And I did not expect it to be straight the fuck down. This is really, I wanted to kind of do this. I wanted to get in over here. Actually, I wanted to get out of here. I wanted to get out of here quickly, but we hit my accumulation zone before we hit the the prior to acceleration trend line. So this is good news. I would hope that we can continue up and revalidate this and then pick it back up for a while, because otherwise I think Bitcoin is at a $40,000 high and then a bear market, and stubborn bulls that are going to hold the price while bears take the elevator down every once in a while to clean out liquidity. That's the one thing I did not want to deal with, and here we are sitting on top of it. But we also had some temporary backwardation on CME futures. I posted right now 29,410, 29,705 on exchanges. So we're still in backwardation CME. This is trading right now. So this is one of the first times I've seen this, okay? Backwardation on the CME. One of the first times I've seen something like this. Thought you might be interested. We could talk about it.
How long have you been following that?
I've been following it ever since the fucking, like, this shit. I mean, when do I've drawn? I've been following this for so long, it's not even funny, man.
So you're saying this is the first time it's basically ever
I've never once seen backwardation on CME futures. Never once seen it, and I've been watching it almost every day.
That's really interesting.
Never seen anything like it. I never thought this would even, I didn't even think it was possible. All right. This is fucking weird to me. And so, I mean, just to point that out, I was hoping, I was trying to stay as bullish as I could. We've broken acceleration line. We broke an acceleration line, came back, failed. And now we have a parabolic move advance. This is on the CME chart with gaps and all. So we have some time. We have some time here to figure some shit out. But this is just getting messy, man. Back to the small time frames. What have we been putting up with? All right. Well, we've been breaking through tons of 1 to 2.5% band signals. We've been breaking through tons of 2.5 to 5% band signals, just ripping. We've had some great bounces. You know, like, this is the market where you enter a position and you put your stop in before you are done, like, with that breath. You got to do both in basically one swing, and you put your stop loss, and then the second you're in money and you're breaking that 0.15% zone or whatever to you know, beat your little your spread required to beat the fee, then take it. I would say maybe have a little bit of pain tolerance, but, you know, in case of stuff like this, but you just got to keep resetting or, you know, doubling down, whatever. It just gets really hard. It's been painful as hell. Tight stops, raising stops, getting stops filled, re-entering positions. It's been homework today. I mean, it's been homework. And now we're moving. Thought we had great support. Trend bias bands lighting up. Horizontal of the bottom horizontal of the first trend signal is still unbroken at 28,984. And we now have Ruby mine in the trend bias band, which is 5 to 10% distance from price. This, of course, is 1.5 to 5 to.
So the Ruby band is your best buying signal. Is that correct?
Well, the Ruby mine is the trend bias, and this means that we've regained the trend. Now, I wouldn't say go all in. I've seen Ruby mines get sliced into a bit, you know, but the Ruby mine is a very, very, very extreme situation, and we've grinded through some extreme support. To get this far means that these bulls are static, which means that sellers are overextended heavily. Now, that, you know, just on a logical sense means that, yeah, the Ruby mine isn't necessarily go 100x, but it means that the trend bias is now strongly in favor of the bulls, especially at this range. And I don't think that we're going to be, I want to hope that Bitcoin can resume a bull market, or that this is just a blip and we go and everything's all good and nothing happened and we could walk past this a week from now. But for now, we have significant support to the point where this is probably going to bounce us back up. I would say somewhere around 33 to 35,000 without much of a fight. You know, it's going to get us a day and a half, 2 days, to get there. The market, this just happened recently. Keep in mind, and what I say is it takes the market a number of days to recover from an incident like this. So just a little while ago, we had on January 11th, we're talking 10 days ago, we had the same scenario. So the small time frames looked very similar. Ruby mine, bottom horizontal, wasn't broken. This one was. This was like the first time. Maybe it wasn't quite broken. I can't really see the wicks there. But point is, we've been through this before now. This is the second time in 10 days that we're going through this shit. And it took us some time. We did find a bottom. We did get out. It took a different strategy to trade this. And I'll tell you, it gives you gray hairs.
I guess you're just losing me a little bit. So you're seeing this as a buying opportunity with a bounce to 33, and where would you be looking to put a stop in right now?
Oh, well, I'm in ride or die mode right now. So I mean, I would say put a tight stop, whatever that means to you. But I'm trading. What's that?
Where's your liquidation then?
My liquidation. Oh shit! The second I say it, I'm gonna get liquidated. I hate saying my liquidation on streams.
Okay, all right.
But no. I'm gonna say it. But like I was hoping you would get the joke. There's probably some fucker in China listening to me right now who's gonna wick the market down real quick. But liquidation is 28,675. It's pretty hot. It's pretty hot. I mean, when I'm in balls deep mode like this, it's ride or die trades. I make a decision. I expose myself far less to the market and I take on more leverage. I get liquidated, I re-up, and I go in with heavy leverage. And my goal is to catch a bottom that's going to bring us up thousands of dollars. This is going to make up for everything by far, if I succeed. So
I was just trying to sum up everything that you were throwing our way there, because
Okay.
I wanted to make sure that I was understanding what you were seeing. And so, yeah, that sounds great. The Ruby mine is something that tells you the bulls are back in control, and it's a situation where you're going to be entering, and you are somebody who trades smaller time frames with higher leverage, and you're going to have your liquidation is going to be your stop. It's going to be a risk to
just for now, this is like you have, like, as a scalper, you need different trading styles and tools. The market is dynamic and so must you be.
Right.
This is a situation where I go in heavy with less money, and if I get liquidated, I re-up. Most of the time, I don't want to ever get liquidated. I never want to play that route. I would rather play with the stop. But now that we've got heavy Ruby mine support, it's a different game to me now. It's about catching a bottom with heavy leverage and being in probably more of a swing than a scalp. That is my goal now. So I've shifted from a scalper to a heavy entry, one-time entry swinger. And looking back at that other one, we made it from 30,000 back up to 40,000. If Bitcoin still has the ability, I would love to see that. But I'm throwing in 33 to 35 because Bitcoin is not so strong right now. The psychological recovery after that period, after that incident over there, was about 2 to 3 days. Now we're going to have to deal with 2 to 3 days more of this stuff, and probably a lower high. I don't know. It's just going to really throw things off. So I'm, I don't really know what more to say. I'm in a position where I want to really take these buy signals seriously. In fact, I am, and I will continue to do so. A dual band confluence bullish. Perps, everyone's been in a bit of disarray. Just small moves to the upside have got us pinched out on the perp aggregated perps. Spot has remained pretty solid here. People are trying to catch some orders. Good to see a dual band confluence. That's always good to see, and they're pretty wide right now. So I'm really crossing my fingers that the ride or die style is one ride and then live, I guess. But I am prepared to take this thing. Like, Bitcoin's doing something that I feel is abnormal right now. So I'm gonna say I'll stick around to answer some questions, of course, but I think I kind of got all my stuff out. I got the long-term picture, which is really important now to me, which before it wasn't. The long-term picture before was sit back, maybe trade a little bit, but let the market do most of the work for you. And now there's something that a wrench that just got thrown in the plan. This is really, really painful stuff right now. I don't like what this market is doing to people. I don't like that I can't read it. And I don't like that my signals are getting pushed down like, they're freaking little feathers, like soy boys. It's crazy. But bullish accumulation is static. And in an ideal seller dominant market, they want static liquidity to sell into, which they've gotten. And we've moved a number of thousand, like about $3,000 from the beginning of my signals approximately to the most severe signals that I have. So that's not much of a margin considering where we've been, 40,000, 35x, right? We're not talking about a huge move between the start of the signals and the end of them right now, or at least the hit of the Ruby mine. And we're talking about a matter of 12 hours. So I'm really hoping that this is a good reversal zone, that bears say, all right, bulls are putting their heels in the ground. They want to fight this back. Let's give it to them for the win, and then let's sell at a higher price and put them back in the situation, which would then be a market controlled by bears. And the signature is, if it repeats twice, then that's enough for me to say it's going to happen a third time and maybe even more.
Well, thank you very much for your input there. That was, what we're wanting to get at is what your position is and what your, what your targets are, what your stops looking like. And I don't mean to make you share anything more than you.
No. It's just a joke. It's just a curse. The curse of the.
Oh
it's
yeah.
like you never bring a woman on board, in 1850 pirate ships,
Great. So yeah, it's well, I think one of the most interesting things about this show for me has been, and hopefully for viewers, has been getting to watch us in our various liminal space. And there's been times where Fibo and I are talking about, being in very uncomfortable space and not really, having good setups, not having to kind of sit back and wait and just, having to deal with that in the way that we do, and having Joe over there laughing at us about, how he's scalping in and out and all this and that. And then getting to see, some of the times where Joe's in more liminal spots as we are looking at some higher time frames and maybe feeling a little bit calmer and more comfortable. So it's definitely fun to listen to your analysis, and I think that it's a spot where you're looking at a lot of things and not feeling too confident. But the bottom line is you've got a position in, and your stops in place, your risk is managed. So that is what is most important at the end of the day. So thanks again for sharing that. And Fibo, tell me, how are you feeling? Is this liminal for yourself being out of the market?
Yeah, I'm just chilling, really. I'm completely opposite of Joe at the moment. He's in a different time frame, so it's going to be a lot more stressful when you get this type of volatility for sure.
You're not, when you say completely opposite, you mean you're not stressing balls?
Yeah.
You have feeling in your fingers and you don't need to wear a freaking winter coat in a 5-degree room.
No, but I get it. I understand. It's just that I'm just looking at it. I'm just looking at the market in a completely different, viewpoint. So, not right or wrong, just different time frames. And let me share my screen here.
Do it.
Yeah. I'm going to start out with I got different time frames on here. I got out of the last, like if I look at my 4-hour here, way back on this threshold here, I got out at most of my stuff. I got out at pretty close to the high here, and I'll show you why I got out of that. I had a little bit left, which I got out around 36 with the remainder of it in this little realm right here, because we had this move that put us back up into the bull zone. but it never really established any trend for the bulls. It didn't even cross over at a point where I liked it. And the price never really got anywhere as the price went into the bull zone. So all of that right there was telling me I got to get the hell out. This just doesn't make any sense. And it makes it a little bit more clear on the hourly, because this was the time frame for the hourly compared to the 4 hour. It did signal the bull zone here. The momentum for the bulls was actually kicking higher at this point in time, but the price was going nowhere. So when I was seeing this on the 4 hour right here, and also on the hourly, just looking just like dog shit, I said I got to get out. So I got out of the rest of my stuff right around this point, thinking that that this thing could start to drop a little bit. So I've been flat since this point, and just been kind of riding it down, waiting for some areas to look for to get back in. I did get an actual short call today. I did not take the short. I shared my stuff on Patreon, but I said, with me busy with work and stuff, I said, I don't want to sit here and watch a short position. It's too stressful when you got to work. And Joe would let you know on, because all of a sudden I would put myself in a smaller time frame, and I kind of wanted to not mess with that. So I'm just going to kind of chill and wait for a good position to get into. Looking at the hourly here, the first spot I was kind of eyeballing, but I didn't really want to buy yet, is this area right here, this red zone I have in here between the 127 and the 141, which comes from this low here at 32,309 and the high up here at 40,127. And the reason I'm using this at the moment is when you come over here, it's when the market actually closed 3 times below this previous low. So once that happened, I start to look at this zone as the spot to possibly go to kind of get that first buy reaction. And so far we're there and we're bouncing off of it, and Joe's getting signals to buy there, which is good. I personally don't like it yet because everything else on different time frames is telling me that this thing could still go a little bit lower, and I'll show you that here in a minute. Another thing is if right now this was the previous the low that broke right here. If we right here on this low is right around the 3,100 level, which we've already closed once, and then we're now in the next hour. If we get 3 closes below this level, what I would want to do is I would want to take my fib extension from this low to the high like this. Let me get it on the right spot. And all of a sudden this 100% level brings us down to the 27.3 to 25.9 down in this area. If we get 3 closes below this 100% level, which we've already had one. So in the next couple of hours, if it stays there, this becomes a little bit resistance here in the near term, and we can likely drop down into this next zone, which is the zone I like even more, because when you flip over to the 4 hour, what we're seeing on the 4 hour right now is we finally broke the 38.2 shallow fib here at 32, basically almost 33. It finally got to where we closed three periods below it, and that's where I got my short, saying that you need to go short at this position, which is right around. It would have been on this close right in here. So it would have been about 32.5 or so, was telling you to go short around that spot. Given that once you break the 38.2, the next level is the 61.8%, which is at 27.4, which matches up pretty well right before you get to this 127. So this 27.3 to 27.4 right here is a zone to watch. And it's actually right in the zone where I've been watching. I've been wanting to buy at 28.8 ever since it was at 36K. I said I'm waiting for 28.8 to buy back into this market, and it's been working its way down there. If it hits 27.4, I'll be filled. And the reason I'm looking at 28.8 is that same the shallow fib on the weekly from this top down. That'll give us a nice 30 a little bit more than a 30% correction. So that 28.8 on the shallow fib is that first buy area for me on there. So that's where this kind of comes from. But right now, with it breaking this area and giving us the bear zone here, the 27.4 is a target that I am actually eyeballing at the moment. And the reason, and the 4 hour has been really weird because like when you take this threshold back here and it actually went into a bear zone right here, it never really signaled to get out. And I mean, I sold some stuff here and then I held on to my stuff here because it never got the 3 closes below the 38.2, even though it signaled bear down here. It did not signal here, so it was not a sell for me just yet. And then it went back up, and then it actually went down to the bear zone again and did more consolidation. So this 33 level has been pretty key for a while, and it's really this latest move is when we broke down below here. So we went into the bear zone, and now we actually had our 3 closes below, and that's where that short signal comes in for me. And which gives us the first signal would be 27.4 is where that first spot would be. So I'm waiting for that, and I will watch it to see how the market's going to react once it gets to that point. Because if you're looking at the 4 hour and if we close 3 closes below 27.4, this thing is going to drop like a freaking rock all the way back down to 20K, probably even further. But there's a lot of support in here that I think should come back into the market. The daily went into the bear zone, but then again, you need to have 3 closes below this level to get a signal for me. And right now it's in the bear zone, but no, we're only on, it actually didn't even close below it on today's close. Maybe it'll close below it tomorrow, but we'll need to see 3 closes, and then 23K would become the target on the daily for the minimum target there. But right now it hasn't signaled, so it's something I'm definitely keeping an eye on. And all of this comes from below it. All of this comes from this timing chart that I've been following for really a long ass time. I don't know if I went over this last week or not, but I'll go over it real quick. Way back here, 2015-16, it broke this trend line right here, and this was a significant point for my system. Right at this point, this was a threshold area, and I have a modified shift pitchfork. Couldn't think of what it was called, but this move, this low here to this point, all fits my system, and then it gives this midpoint as a spot to look for moves. And if you take the fib deal and you start down here and from the threshold point and keep going to the highs, the 38.2, it kept hitting on every dip, just like it's been doing on this latest run. Goes up to here, it's the 38.2, goes up to here, it's the 38.2, and so on. And it wasn't until it got to the top here on this point where the 38.2 is finally broke here, and then it actually had a support and resistance flip, and then we went to the downside. So I look at this midpoint as key levels to really give us the sign of, are we going to continue more to the upside, or are we going to break down into bearishness? And this point right here, I have it highlighted in green. As the market came up and then came back down, it's this zone right in here that I'm looking at before it moves back up to test the high again. And we're kind of in that same realm. And the reason I picked this point is once we broke this trend line, it worked up to the 127 to 141 right here, went up and then came back down. So this whole zone was, if it was going to reverse, this might be the spot to do it. But it went through and it held, and then it went back up. So if you fast forward to today, same kind of deal. It broke trend line, went up to the 127, 141, went up, hit this midpoint, And then now it's coming back down into this area, just like it was kind of trying to test down in here. It's coming down into this zone, which gives us basically 26 to 29. The line comes in right around 27, 28, somewhere right around in there. And that's where that zone on all these other ones are that I'm looking at to buy. And that's where the 28.8 comes from, because it matches the weekly, because this is the weekly. And it matches the threshold that I had on the weekly over here at the 28,793. And that's where the 28.8 comes from, because it's just kind of rounded. And then, but the key to me is this midpoint. Right here, it closed 3 weeks above this midpoint, and then came back down and did not close 3 weeks below it. So this right here was a major inflection point that this was going to continue trend. And then it went off to the races. Down here, it actually closed 3 days under the line, and then only closed 2 here, and then we're off to the races to the downside. Now, one of the reasons that I had a target at around 40,000 was this point, this midpoint. And that's where on the 4 hour and on the daily, that's where I got out of my longs that I had on this threshold up at this point, because it was hitting this midpoint, and that was a good spot for me to take profit. Now, this is the perfect correction coming off of this, like it did right here in 17, to where it corrected back. I don't even know what that is. Let me see what the percentage was on that. We had a move for, what do we have? 38%. So, and right now we're sitting at, let me move that up. Right now we're looking at 30% right now. But if we get all the way down to the 27.4, we're looking at 34%. So that kind of matches what happened here. And then we pop back up to hit that midline. So I'm hoping, that this holds down in this area where I'm going to be hopefully buying, and then it works its way back up and touches this midpoint and gets us above that midpoint to where we get a nice support and resistance flip, or resistance to support. But I mean, there's a lot that's going to have to happen for that to, to come to fruition. But really this 127 to 141 zone is really, really key to hold. Because if it doesn't, then you're looking at moves all the way back down, probably to this line. Then that's when you're talking about, your 18, 19, 20,000 and your 50% corrections could happen if these levels break. But for now, I'm just kind of chilling, watching these zones, and I really like this zone right in here. But the first spot I'm looking at is this 27.4. Which is the 61.8% on the 4 hour. Hopefully that it ticks down into that 27.4, breaks this back up, and holds this daily for not closing 3 days in a row underneath this line, or we can get all the way down to that 23, which I really don't want to see right now, because that would be kind of ugly. But right now I'm flat, not doing anything, just waiting to find a good spot to get back into the market. Not really trying to call the low of where it could be, but I'm just waiting for the market to dictate where that low could be. Ultimately, I'm a conservative player. I probably won't buy until the 4 hour actually signals going the other direction, because I'm a trend follower, and I really don't want to buy into, I'm not a person that really likes to buy dips. Unless it's a perfect spot that makes sense on a lot of my fib strategy. I'm more inclined to let the market dictate that the trend has changed, and just say this breaks back up above 32 and gets above 33 or so, and it breaks back into the bull zone. I'd rather buy at 33, knowing that this thing's cranking back to the upside, back to 40,000, than trying to buy it at some of these other levels, because I'm following the trend now. Because these are a little bit longer time frames. When you look at the 4 hour and into the daily, those longer time frames are, trend following, and not so much scalping like what Joe's doing. So that's a whole different ball game when you're trying to find the spots to buy and scalp out. But this is more of, this thing is triggered short for me, and all the way down to 27.4, And then that's when I have to reevaluate, is this the spot to buy, or does it go further? So right now I'm a hold and wait, and let this trend continue. So unfortunately, I did not take the short here. Hopefully some of the people in my Patreon group did, because I told them that was exactly the time to do it. Hopefully they did. I'll find out later on when they let me know. But I did not take it, kind of kicking myself. But the thing is, I just didn't have time to mess with it. So there will be other opportunities. So I'm just going to chill and wait for this 27.4 to hit and see what happens. So I know a lot of rambling, a lot of going on, on these charts, a lot of different time frames. I'm sure I've confused the shit out of at least 300 out of the 580 that are watching. And so if there's any questions or anything, just feel free to reach out to me on Twitter, or just ask questions. I'll try to get to them if I have time. Any questions, comments there, Joe? Saw anything happening out on the chat?
I'm personally processing what you said. Man, falling like a rock. If we do fall like a rock, did you have a target? You said the 20K range plus 20, 20. I'm assuming 20 to 25 ranges would be your landing zone.
Yeah, my right now it would be about 23K would be the drop area for me at the moment. The only other thing would be is if we got on the weekly here, 20.6 is so basically 20.6 to 23K is going to be major floor. Because if that breaks, I mean, all hell could break loose beyond that, because that 20K is major psychological, technical, whole bunch of freaking reasons.
All right. So before we start talking about all that, let me make sure I'm understanding. So you got a short signal that you missed. You didn't have time to manage.
I didn't miss it. I just didn't take it.
Yeah, right. You didn't have time to manage it. Now you are seeing that 38.2 around 28.8. Is that a number you're buying? Do you have orders there, or are you just kind of sitting and waiting for the?
No, I've had a 28.8 order in for the last week, just waiting, just sitting there. But that's where my first buy is, and that's based off the weekly shallow fib right there.
Great. Well,
that's my first one, and I'm only going to be buying in at like 10% of what I would normally buy on my short term, and go from there. I'm not going all in at 28.8 or anything like that, but that's that first spot that I've been waiting for to get back in long, and I'll start out with 10% at that level.
Great. Appreciate it. That's what I was looking for. And now we've got the market testing a critical spot for me. So I'm going to go ahead and try to get through my analysis.
Stop share here. There you go.
As I can, because I do have a lot to share. Let's see here. It would be the stop one. There we go. All right.
We might hit that 27.4 before we get off the freaking call. The way this market's acting.
Okay, and my computer is sure moving slowly here. Jeez Louise.
I might have my 28.8 fill. Might be coming.
Well, I just would love to.
It's looking scary. It's looking intense right now, Fibo.
This is
but I'll be cool with 10% of 28.8.
Guys, let's calm down. I'm just going to try to give my analysis here quickly so I can.
Okay, it popped up. I thought you were waiting for it to pop up. Sorry, man.
This is a time where this is a buy. This is not a time to be scared. This is a time to just, follow your rules and pay attention to your levels and not get overly worried when the emotions start kicking up while Bitcoin's dipping in a big bull market. It's time to just take a few deep breaths and not think about too low of prices, because once you start thinking about all those, that's when things tend to not get there. So, and maybe they will. Maybe Fibo is going to get his buy filled and his stop filled before I finish talking. But it's just important to stay calm during these times and not get overly anxious or emotional. So the main thing I'm looking at here myself is being extended below the moving averages that are still in a very bullish crossover. I talk about this time and time again. When you get below this 200 moving average, if the 50 moving average is right here, okay, that'd be a problem. Now I'd be thinking that we're in a posture where we could actually move to 20K in the next day or two, and we still could be for sure. But this is a spot where I would feel very comfortable with some sort of pullback up and into the 50 before we head back down further. And generally what happens there is it'll take a couple days. It'll be a move like this. It takes a couple days that makes us all forget about how we're feeling right now while the death cross comes in, and then maybe a big move down does come, or maybe this turns out to be a bit of a local bottom. But one thing that I always look at during times like this, and one of the main things that was used to develop EMASAR, we'll have to get these out of here because I am very excited about those, but not ready to share them. I've been using them for a while now, but I'll share that in a little bit. But so one of the main things that was used to develop EMASAR was the distance from the moving average. When you get overextended from moving averages, it's a time where you expect a reversion to the mean. So what that means in this situation is that I don't necessarily expect this to be a bottom and for us to go straight to 40, 50, 60K, I expect a reversion to the mean. And in this situation, this is looking at the 20. So let's just go ahead and turn that to the 50 and make it the 50 EMA. And let's just compare, let's just look at the last time we were this extended below the 50 exponential moving average. It's going to be not in very recent history at all. Even during the capitulation dump here, okay, well, this is in dollar amounts. Let's see if we can change this to percentage. Okay, that'll make it a lot better. So right here during the COVID dump, we were 400% below the 50 EMA. So that would mean right in here, we were, the moving average was up here around 8,000, while price was down here. So just take a zero off when this says, it's saying like 3,000% or whatever. So this says, whatever that, let's see here. I'm just it's probably going down from up. I'm sure that the math on TradingView is right. And I don't need to go through the calculation, but with everybody. But what this is saying is that this percentage below the 50 moving average, that's how far extended below we were in this situation. And while I don't have the exact percentages adding up, we can see that it's not dollar amount anymore, and we are extended very well below. So this is the situation where I really look to buy if I'm not already fully exposed and that sort of thing, because even if it does continue lower, I expect to be able to get a trim. And that's for me what's so important. If I can get an entry and then we get a dead cat bounce and I'm able to take 20, 30% off the table instead of break even stop, then I'm able to do that, 3 or 4 times. And if I am able to catch a bottom, like Joe's talking about trying to do, potentially I can do that in a way that I'm not going to end up with, too bloody of hands, or I'll be able to just do that effectively, as even if I'm wrong, I can manage risk very effectively in situations where we get overextended from the mean. And this is a perfect example why I'm glad that we're going live right now. When the markets get moving and things really get shaken and things are happening, you get emotional and your emotions take over and you start, you feel it, you feel it. And when that happens, you're going to be tested. And the test is, what do you believe? What do you believe in? What do you believe in more than anything else? Do you believe in my call? Do you believe in Fibo's call? Somebody else on Twitter? Do you believe in yourself? And if it's yourself, then what indicators do you believe in most? Because it doesn't matter what looks best in hindsight or what newfangled thing somebody just showed you or whatever the case may be. What matters is what you can trust in a time like this. And for me, it's math, and that's it. I can trust math no matter what. And I know that it's all a game of percentages. Think of the Gaussian probability curve, where there are going to be times where we get overextended from the mean and we just keep going. And there are going to be times I take losses, and that's the cost of doing business. But as a trader, I picture myself as a professional gambler, essentially, where if the odds are in my favor, I'm going to take that bet. And the only way I'm able to take that bet or have confidence in the odds is through math. So when we get to a point where we're in a long-term bull market based on my trend following tools, I'm just like Fibo, I'm a trend follower. And the most important reason why EMASAR was developed is what we've seen throughout here. And I've been so incredibly happy about how it's worked. And we'll get to potentially see what happens here. So the main idea about EMASAR, and the main thing that I say is the hardest part about trading, is distinguishing a correction from a reversal. Everybody talks about buying dips. Let's buy the dip. Let's buy the dip. A couple weeks ago, everybody is just, when are we going to get a dip? When's the dip coming? You go check Twitter a couple weeks ago. Will Bitcoin ever dip again? And then once it happens, boom, here we are. That's where we need to be able to have something to help us identify, is this a dip in a bull market to buy, or is this a correction? Is this the first stage of a correction, like the 15K was in 2017? Is this the first stage of a reversal into a bear trend, or is this a dip, or is this maybe going to develop into a range? So that's what EMASAR is developed for, to distinguish what is the trend, and then to help us identify exactly where it goes wrong. And that is where this buoy is the most important part of EMASAR and the main thing that I pay attention to. Because this is the line in the ocean, the buoy in the ocean for correction versus a reversal. This is where we buy. This is in investor mode right now, so you're not seeing the beach, but we buy between the 200 and the ocean. We double down in the ocean, and then if it breaks the buoy, that's where we start expecting either a range, or if it breaks the underworld, this is where trends go to die, the underworld. So here we had the perfect double down and the perfect support from the buoy. And this is actually when I was visiting Fibo. I was watching this with a bated breath for every close as we were within inches. This was my liminal space. As we were dumping into it, I'm not too worried. I mean, here, this is much scarier because, look, the moving averages are close and they don't have as much weight and momentum. Sure, we kind of get extended here, but that is a lot different than what we're seeing right now. So
I remember you checking that when we were out on the disc golf course.
I sure was, and I mean every step of the way. And then as we got out of and then here we're resisting the once we return to the 50, this is where it could really dump down. And then once we popped above, that's where it could kind of be the shakeout head fake. But now here we support. This was where I started getting excited. Then boom, okay, and then that was our spot. And I even did get stopped out on a portion. I talked about this on this show. I had stops layered in here because I need this to hold. And I remember one of them getting triggered. Like I went to bed and see how this kind of went down a little bit. And I remember waking up to having one of them filled and being happy that only one was filled because it was within dollars of filling the others. So what are we seeing now? as I said that I wanted to take over the screen share, as I need to get back to work here myself. It's because this candle was coming in and not only testing the buoy, but coming down below it, which that's where I start being like, oh boy, absolutely. I've had some sell orders filled, and I'm making sure that they're, the stops are triggering and getting filled, and they're, layered so that they're not intended to crash the book or anything like this, but just this moving through this buoy right here is absolutely has me selling some. And now that we're getting, but as that was happening, as we have this full kind of red bodied candle through my critical area of support, the first thing my eye did was see this 50 EMA way up here. And it just kind of slipped out of my mouth like, oh, that's a buy. Even though I wasn't buying it, I was actually selling because I got exposed on the long signal down here, 96, ended up around 98 with the scaling in and whatnot. So now here I am where if I wasn't in and like we just reversed from a bear trend to a bull trend or a chop zone to a bull trend, then I'd be buying this hard. Absolutely. And I would be looking, and anybody that's been watching this show since back when it was Sawcruteez Streamz has seen me draw these lines time and time again, where it will be just looking for a return to the 50, to where if I can buy some here and then trim 30% there and set a break even stop here, now I'm in a profitable position, even if the market doesn't go up from there. And right now we're looking at 20% extended below the 50. So if I was to enter $1,000 long and then we bounce there, that's the position's up 20%. If I exit, we're going to say 30% of the position. Now I'm looking at, like 6% profit on the overall position. Plus I've still got 80% exposure or so that with a stop loss set at break even is what I'd be looking to do. And then looking for a pullback to see what happens. Does it reclaim the 200 and kind of consolidate between the 50 and the 200? Well, then in that situation, I would think we're going to get some sort of big W. If it resists the 50 and reclaims the 200, it will give some sort of higher low, and that would be the perfect big W. And this would be the spot where I would be looking to buy back potentially if I'm not fully exposed and just looking to hold on to the risk-free exposure. Or I would be looking for something like this. Let's see what price that's at. 25 or so, and then right there, to where if I'm able to hold through something like this and then we don't get the bounce until here, that's where I look to exit at break even. And have some sort of hard stop for worst case situations. So EMASAR told us to go long at 97, and it's told us to stay long this whole time. And that's the beauty. That's why it was designed. When these markets get overrun like this in this parabolic fashion, trying to figure out when they're too far, too gone, when we should be buying dips and when we should start to, not be buying the dips anymore. That's what we're looking at for EMASAR, and that's where I'm going to be trusting this more than anything. It's based entirely on math, and when we're up here, something like what's that, 300% or so above the entry signal in 6 months, 10 months or so. This is where I've been all the way here through, holding on and, trying to hold on, not trying to catch the exact top, trying to hold through and wait for the trend as I follow it on the 4-hour chart to either signal close long and or open short. So now we're still bull trend, but we are testing the most critical spot for me, and we're getting a nice reaction. Now that we're back above the buoy, this is all that matters to me, is seeing us close. Fibo looks for 3 closes, and I've started to use that myself. When it comes to this buoy, I don't want to see 1 close. It's right now at 29,381. Just 1 close causes me to start, just scaling out, opposed to just having these stop market orders set. So there's a handful of things that I'm wanting to take a look at. Hopefully I'll be able to. The angle, so Joe's kind of talking about the accelerated trend lines. Now we're kind of seeing them to the downside a little bit. Just kind of interesting. It makes me, this angle, when the market starts moving at this angle, this is where I start perking up in my seat, and that's when I want to really look at the funding rates and futures curve, and that's when Joe said this is the first time he's seen backwardation in CME. That's where that's really, really cool to hear, but I can't trust it because I've been following BitMEX every day for the last few years. And that's the only one that I can trust. And as soon as you said that, I went over to recheck, and I can't believe how it has reset. The futures were at over a 6% premium for days and days and days and days, maybe weeks. And now all of a sudden we're back to a healthy 3%. And the predicted funding rate is now negative on BitMEX. And when I see a negative predicted funding rate, when the price is in the ocean, it tells me that it's panic selling and that the stops are getting run. And that's what I want to see when the price is overextended from the mean. That's something else I've talked about recently as we're dipping. It was on Tone's show that I mentioned that the funding rates were still very high in this area. And when we're dipping and the funding rates are still high, it's bad buyers, and we're gonna need some chop, or it's probably not gonna be the bottom. And they did reset. They did reset in here, which did give me some confidence, but that just reset to normal and did not go negative. Now we're going negative, and that is a very big deal to me. So seeing a bit of a what could definitely become a descending triangle. I will be paying very close attention to this bounce, and as I'm expecting, well, maybe it doesn't happen, I'll be paying very close attention to this price action. And if we do, pull up and into the moving averages that I was looking at, that would be right around here on this trend line. And if we make another lower high, Joe mentioned 33 earlier, this is where I'm looking to sell. Myself is around 33, 34. And if we do just pop through, then great. I'll have no problem buying back in. But for now, we have created a new low. We do have a lower high, and that is the main thing that I look for in a trend. If there are higher highs and higher lows, it's a bull trend. If there are equal highs and equal lows, it's a flat trend or no trend. If there are lower highs and lower lows, or lower highs and equal lows, that's a descending triangle and or a bear trend. So in that situation, I'm going to look to draw a channel to try to help me identify trend support. And this is where I would be looking right in here. So if we do break down that buoy, that's going to kind of confirm this bear channel to me. And I would be looking around 26 for that to be support from that parallel action there. And then, as I've been mentioning recently on Twitter, and what Joe is showing basically is going to be the trend line. Let's see here, down around here. So I definitely think that this is going to hold. Yeah, we might go to 20, and I might be wrong. But I think that this is the type of dip that I love buying. This is what makes me remember 2017. This is the type of stuff I try to wait for and be positioned for. By trimming on the way up, it's what give some cash in the account to buy dips, and then also having some stops in right places also is what can potentially help me to do that. So if we fall 45% into a bull trend line, I'm going to be buying it. That's all I got to say, because that's something I can trust. And it's something that's easy to say that you'll be buying it right now. But when it really gets down there to it in real time, it's going to seem like, oh, for sure, this is break it down, or there'll be a reason not to do it, or whatever, because it only comes down to what you trust. And if you trust trend lines, then I think that 40% dump into a trend line would be something to definitely pay attention to, because for me, I really trust trend lines in trending markets, and that is where I would be looking to rebuy if I do get stopped out on the EMASAR long that is getting very close to being stopped out now. One thing I am paying close attention to is the reaction that we're getting off of the weekly low. So right here, we took out the weekly low for the first time in a very long time. When was the last time we took out a weekly low? Wow. So yeah, I mean, this is a nice solid dip. The last time we took out a weekly low was September 21st, 2020. So that is a big deal. And how it reacts is going to be very important. Like, the price, that's where a lot of stops are going to be set. So if you run the stops and you support, that's where, you know, this very well could be a very beautiful run on stops, and something that I have just started to call myself in my own mind the trap house, which is going to be between the prior week's low and the last 2 weeks low. So if we fall below this week's low, and we hold without even a wick below the prior 2 weeks low, that's the perfect recipe for a trap, a run on stops. And if we just fall even a wick below this week, second weekly low, that's what really starts to tell me that the trend is changing. Opposed to it's just a correction in a bull trend. And it's amazing how well that lines up almost exactly with what EMASAR is saying. So right now, I'm really liking this action. And if we just wick right out of this zone and, you know, kind of gravitate back up towards here, we've still got 2 days until the end of the week, and I'll be paying very close attention to that. The other thing I'll be paying close attention to are just going to be the horizontals from these candles. If we get back-to-back inside bars, then I'm going to be drawing horizontals with the highest wick and the highest close. So inside bars right here, we have open, high, low, close inside this candle. Open, high, low, close so far is still inside this candle. So that would have me having support here, and resistance on this close, and resistance on this close. So for me, this is chop until we can break down 27.8 and or break above 42,000. So that's what I'm going to be looking for, is that potentially we could even chop all the way sideways into this. It's already been a nice dip, and that is going to be how I'm seeing it. Is we gotta take out 27.8 or 42. Otherwise, I'm viewing it as chop between 28 to 30 up to 38 to 42, and that is what I will be looking at, and that will all very much be relative to how price is responding to this moving average, because there's a couple ways to revert to the mean. One, we could do that and boom, we reverted. Another is we could do this while the moving average approaches, and then boom, here you've reverted to the mean, but you're still kind of at the same price you're at now. That's the bearish case, where you consolidate low and the reversion to the mean happens at the same price. So
yeah, we don't want that to happen.
That's what would put it in a position to break down critical support. So I don't think that's going to happen, but a lot could change in a very short amount of time, which is why we're here to share our most honest analysis in real time, but why we're trying to teach you guys, our method, so that when we're not here and that the markets are moving and you're getting emotional, that you're able to take that deep breath and pull up something that you trust, and just know, and this is another reason why it's so critical to wait for candle closes for so many strategies, and for people that if you're finding it hard to really overcome those emotions that are so inherent, which makes this so much easier said than done, then make yourself a rule of always waiting for a candle close, because the biggest emotions always come in the middle of these candles. And you think about these nice, beautiful kind of wicks that, I don't know, in hindsight are such beautiful buying opportunities or whatever, like this beautiful wick right here. In real time, like that's just a very scary dump in the middle of the candle. And if you're able to wait for the close, well, the closes can really help you to just, if nothing else, know that you have a certain amount of time before you're going to make a decision. So if you have a 4-hour candle that's still got, 2 hours until close, I know that I can go to the hot springs, get in a meditation session, eat some dinner, because I'm not going to sit here and pretend like I don't get anxious and that those emotions get the best of me all of the time, because they absolutely do. And this is one of the main things that really helps me to stay focused and disciplined when trying to buy some dips, is just being like, all right, I got 2 hours till the candle close. I notice that I'm feeling a little anxious. I just I've gotten really good at, feeling inside about and noticing those signs of when I'm getting anxious. Okay, so let's, if there's 15 minutes, maybe I'm going to just go for a walk and just get a breath of fresh air and look at the sunlight and smell the roses. And it's unbelievable the difference that makes versus just being trapped in this head in the sand type of zone where you can't be nearly as objective as you would be if you just got a little bit of fresh air. So let me see if there was anything else.
Hey, when you're done, Saul, I want to show something else real quick.
All right. I just wanted to show one thing that was very
no problem.
Similar.
I was going to say, since I'm up $1,000 on my trade already, I wanted to show something.
Now we're talking. That's.
Oh, you took a long too? I didn't hear you. Oh man, yeah, this long so far is good. Anyways.
I was buying at 28.8.
Yep, just like you said, as the emotions were coming and your order was there.
That order's been there for a week.
And that's another very good lesson for people is how many times have you had the perfect order and then you canceled it either a day before it came there or right as it was coming there when it was the perfect order.
Not that it can't just drop right back down, but I mean,
but it's something to learn from. You stuck to your system and you let it, you're just letting it happen. And now you're not overly worried about if it does fall, you're not worried about risking too much. So very quickly, I'm just going to throw.
I'm going to get onto that after you're done though, Sock, because there's something really important about that. Okay.
So I just wanted to throw up this log curve trend line, which is very similar to what Fibo was showing, which is something I've been paying attention to for a while now. It's basically ever since it was perfect resistance right here. That's where I kind of started looking back and be like, okay, support, resistance, support. Okay, I'm going to have to, really be paying close attention to this. And now here we are, one close above and a move back below, which this is really, got a whole lot of similarities to this right here. I mean, is it so far one close above, red candle, and let's see what the correction was here. 34, 35%, 37%. 32%. So this, for me, is still very much just the early stages of phase 2 of a new Hyperwave. And let me just take that off the log. And remember, phase 3 is where Tyler would say is the best time to buy in a hyperwave. So we're not even where Tyler would be looking to buy based on hyperwave rules. He'd be based on consensio, but for hyperwave, he's looking for phase 3. And this is our phase 2. So there you have it. This is why I'm very, very interested in this trend line down here. I think it's going to hold. If it doesn't, that changes a whole heck of a lot for me. And in this current environment, I see absolutely no reason why this won't hold. And these are the types of dips that maybe only come around twice in a really good bull market. And they're the ones that you can only take advantage of if you're properly positioned and you are able to execute in the heat of the moment. All right, so that's everything that I had. And
Yeah, let me just show one other thing real quick before we.
Yeah, let me talk to you, Fibo, about your thing real quick there, because I want to say your wick catch there, because what Fibo did, this is something important that I learned. One of the most important lessons I learned in fighting was, I remember asking my sensei about blocking. I wanted to get better at blocking, and he said, "That's where you're wrong. It's not about blocking. A block is attacking an attack. And you are essentially attacking an attack. This is clearly a wild rundown. You had your position not ready to get wicked out of a trade, but ready to get wicked in. So essentially, that's something that I think is very valuable to do as a trader, is to have orders at places that that are wick hunt zones. And I know you have your technical reasons, but this kind of stuff happens all the time where you can get a really good wick. And, I just wanted to point that out. This is attacking an attack in his case. And I think that's like a really, really good way to approach the market. But just a bit of that's it.
No, it's good. It's good. No, what I wanted to show was 28.8 was the level I've been looking at for a while on this correction. But when you look at the hourly here, a couple of things. It went down and filled, but this zone was this first zone that I was talking about earlier, was the area that could be an area to buy. But one thing I noticed was you got a nice bull divergence here on the RSI and the hourly here, and then if you take a step back to where this, back here when it was in the bull zone here, and then it broke down, same kind of thing. It made a new low under this low. And gave us this range right in here, and also had a nice bull div in the hourly, just like we did here. So once we broke, we had this bull, a little bit of a bull zone here, broke down right into the revert. The 127 to 141 is the first level to really watch for a possible reversal. And when I say a reversal, a change in trend off of the one that is current. So when this is moving down into this point, this was the zone to buy. It actually whipped a little bit underneath, and then took off, and then it created this bull div on the market right here. So same kind of thing over on this side. It broke down into the threshold here, and worked its way down. Nice little bull div, wicked just a little bit underneath this zone that should give us a reversal off of this possible move to the downside, to where we can pop up. And it's looking like a nice little floor to possibly give us a change in the current market that we're in at the moment. So just wanted to kind of show that the way I use these fib extension zones off of making new lows. So the reason I didn't take this low is because it never made 3 closes below this low, just like I took this low because we haven't made 3 closes below this low yet. So these are the zones to be watching. And given that it did a nice little bull div on the hourly, doesn't mean that it's going to reverse forever. But the last time this reversed, the move from when I had the threshold down to this point right here, it went back up to the 61.8% level at 36.9 off of this move. So on this one right here, the move would take us back up to 33 on this point. If it works its way up to the 61.8%, and then maybe work its way back down again. And maybe that's right around the 55 that Tyler, yeah, exactly. That matches up you know, how you're talking about it could go back up to the 50. This would take us right back up to the 55, which matches the 61.8% level. Like you said, you should be able to get a nice little move back up here before it even goes back down lower again. So right now the 28.8 buy looks fantastic, and then working its way back up to that 33, which I think earlier, when Joe was talking, I think he was long looking for a move up to 33 also. Was that correct?
Yeah, that's pretty much my conservative target.
Okay, cool. So I just wanted to show that real quick. Other things that I was kind of looking at on the, now that I was in a position on the hourly, I'm going to be, looking at it a little closer. So I was just looking at some of the areas that might make sense. And so far it's making sense. So just wanted to share that.
Beautiful. Thank you very much. I certainly appreciate it. And I think that will wrap it up for us today. I guess I'll end with a little philosophy, as I'm wanting to weave a little bit more of that into the stream and the stuff that I do. So I've been cutting my own hair here for, I don't know, since the lockdown, basically. And I think I kind of had mentioned briefly that it was to buy more Bitcoin, but that wasn't really necessarily true. The real reason was because I wanted to take a little bit of control over my identity. And what I noticed, one of the things that really got to me about the lockdown was not being able to cut my hair, not having a haircut. And when we really got towards the end of the lockdown and people were really starting to get depressed, I was kind of noticing that we're all looking depressed. We're all looking like shit, and therefore we're feeling like it. And it made me think, well, what's the first thing that they do when you sign up for the Army or get drafted? Well, they shave your head, and they tell you it's because they want to take your identity away from you. Right. So this is a very, well-known tactic that is used by government agencies to try to dehumanize, the people who will go to serve in the military. So this just really got to me, and I'm realizing, you know what, I am not going to allow that to happen for me. So I started cutting my own hair, and ever since I have now I'm rocking the Viking haircut, and I'm really liking it. I'm going to be sticking with that for a while. So this is the new look for me. And the last kind of bit of philosophy that I wanted to tie it off with is what I've been thinking about recently. Was the story of Samson from the Bible. And I always love these ancient texts and try to really understand what they're telling us. And I can't get it out of my mind that it's almost like the opposite of Samson, because of how many people that I just come across that have really gained a lot of confidence, or just kind of shed some old skin is once they decided to go bald. When they're balding, and Joe maybe even has a little bit to say about this before we leave, but when people are going bald and then it's out of their control, that identity change, and then they shave their head, all of a sudden they take control. And then I don't know anybody, I haven't met one person who shaved their head and they're like, yep, I'm going back. I'm definitely going back. So it's kind of just got me thinking that that first time cutting your own hair, it is a huge battle against your ego. Like your ego, it's a fight against your ego. Like, are you really gonna do this? What if you screw it up? What are you gonna look like? This and that. And that for me is kind of like maybe the moral of the Samson story is almost the opposite, that if we're able to confront our ego by cutting our own hair, that it gives us a little power. So I've got my Viking haircut, and it's definitely already given me some power. What about you, Joe? Did going bald did give you any powers?
Well, yeah, they've done a ton of research on it. Basically, bald men are, you know, a lot more assertive and they bear a lot of strength and you know, and attract tons of women. It's actually a really unique anomaly that I appreciate. Um, so, but I would say in order, I want you to go full Viking here, and you need to do some braiding up here. You got to do some braiding.
I would
Yo,
love
dog. Yo, with the shaved sides and the braided top, you're gonna be fucking sickness, dog.
dude.
You're not gonna want to wear a hoodie anymore. You're gonna be like, hey everyone, what's up? Same,
Yeah,
I'm still the same
Uh,
guy. Don't worry, I'm the same guy. You know, but next thing you know, they're gonna be treating you like you have a girlfriend.
That's what if the Bitcoin price doesn't do it, then the braids will have to.
Yeah, I'm just gonna say I'm 50 and I got a full head of hair and I'm just kicking ass.
You're looking great, Fibo. I love what you got going on, man.
No, I actually, I'm blessed to have a lot of hair because actually, when I was a baby, I was in a head-on car collision with my parents, and my head got crushed, and a piece of my skull went into my brain, and they had to remove it because it caused a blood clot. So I have scars and dents all over my freaking head. So if I ever go bald, I will look like a mongoloid, dude. I'll be one scary mofo.
No, you just need to answer less questions. When you go bald, answer less questions. All those scars will do like most of the talking for you. I'm telling
Yeah.
you, you'll kill negotiations.
So actually the hair actually, I mean, covers it up pretty nice. Not that it's bad. It's just, I look, I mean, when I get my hair cut for the first time, you can usually see a lot of them. But I don't give a damn. It happened when I was 6 months old. So, I mean,
Ooh, so one of our bets might need to be in the future that you got to shave your head.
no, absolutely not. I did mess around because I was on the swim team in high school, and we used to shave like freaking lightning bolts in the side of our head and all that kind of weird shit back in the 80s.
Yeah.
But nope, I like my hair as long as I can keep it because it kind of keeps me good looking.
Well, they talk about dropping babies on their head and what happens to them when they turn out after that. And after hearing your story with the car wreck and your hair, you got your powers when you were 6 months old.
Yeah, maybe that's why I can see Fibonacci weirdness in the
Yeah,
markets.
you also have strong you have extra like muscular beard strength. You got a lot of strong hair going on there. So you just
Oh,
keep
on
that, yeah, you
that.
just keep that thing going.
We'll have to conclude on that note. Thank
What
you
a
all
thing to conclude on.
tuning again. It will be interesting to see what happens here with the price of Bitcoin. We will be back at you next week, usual time. And thanks again for commenting in the live chat or below and clicking the thumbs up and subscribe. We will see you next time. Later.
Peace.
Yo, much love, peeps.